In 2020, I decided to quit my job to pursue full-time trading. Had I ever received a payout with prop firms? No. Had I ever even taken a prop firm challenge? Also, no. But was I making a ton of money on my personal trading account? Also, no. So was I being dumb? Yes. Yes, I was. However, what happened over the next 12 to 24 months was absolutely life-changing. I went on to make enough money from prop firms to live 100% of my trading income for 2 years. No other source of income, just from prop firms, which meant I could remain unemployed according to my parents, but still pay my rent, still pay my bills, and get to spend each and every day however the heck I wanted to spend it. So in this video, I'm going to share not only how I did this, some high-level, non-generic takeaways for what I did to get there, but I'm also going to show and share at the end of the video a high-level breakdown of the strategy that I used. Spoiler alert, literally my 8-year-old cousin could do it. I believe that simple trading is effective trading, and so if you are looking for something new, want to try something new, this might be the strategy for you. Number one takeaway: most traders spend their entire day trying to become the best possible trader, and that is completely fine. That is not a bad thing. However, I believe that even if you are the best trader, if your living expenses are too high, it's going to put too much stress on you, it's going to make you a worse trader, and it's going to stop you from being able to achieve the freedom that you are trying to find with trading. So you see all the influencers online posting pictures of their Lamborghinis, probably rented, of their Rolexes, overrated, of their travel. Travel's great, but of these really flashy lifestyles. And most traders, myself included, get into trading because we are drawn to this. We are drawn to these nice things. And there is nothing wrong with nice things in life. However, freedom is the nicest thing in life. Nothing is better than freedom, of getting to wake up and do whatever you want, of not having a boss, of getting to dictate how you want to live your life. And fortunately, prop firms give us the opportunity to do that. Before prop firms, it was almost impossible to grow a personal $1,000 trading account, to make enough money from it to live off of. It was impossible, but that has changed with prop firms. However, the real goal here of achieving freedom does not come down to just you being a good trader. It comes down to you living within your means, to keeping your living expenses low. So for me specifically, in 2020, I quit my job, not yet funded, and I moved out from my parents' house to the city all by myself. And my rent at the time was only $650. Now, it was COVID, and unfortunately I live in a communist country, Canada, and so everything was closed for multiple years. Because things were closed, I wasn't going out, I wasn't spending money. So yes, it was an exception, but my living expenses were low as a result, and they're still low, relatively low today. Okay, so my rent was $650. I was spending a couple $100 on food. There was no activities. Within, $1,500 was more than enough to live off of. I had no car. I was walking, not to work. I didn't have a job, but I was in the city. I was walking, I was biking, I was taking public transportation. So $1,500 was more than enough. And $1,500 is less than 2% on a $100K funded account, which is just absolutely mind-blowing. If you have a $200,000 account, which I quickly got to, make 1% a month, just 1% a month, and you are taking care of your living expenses. You are a free man or woman for the 4% of female viewers that this channel has. The point is, even if you're a phenomenal trader, but your living expenses are $5,000, $10,000, $15,000 a month, I get it. Some of you have kids, some of you have responsibilities. But if your living expenses are high, you're going to make it so much more difficult for yourself. And so hopefully you're watching this, you're relatively young, you don't have too many serious responsibilities. If you can keep those expenses low, if you can ignore what all of your friends are doing, ignore what social media tells you that you should care about, it'll make your life so much easier. Number two, I passed 100% of the prop firm challenges that I took. I took 4 $100,000 FTMO challenges. Sign up for Lark Funding, not FTMO, but I passed every single challenge that I took. Not because I'm some amazing 10 out of 10 trader. I truly believe I'm a 4 out of 10 trader with 9 out of 10 discipline and emotional control. But I passed 100% of my challenges also because I was not just risk managed, but I used dynamic risk. I promised at the beginning of this video that it wouldn't be some generic advice video. And so I'm not going to tell you to just be risk managed. I also am not going to tell you to try and be like many influencers that just gamify the system of spending 10K on challenges to make 11K in payouts. Those aren't traders. Those are gamblers. I'm sorry. But the reason I passed was because I used dynamic risk. I think you could double, triple, quadruple your pass rate simply by lowering your risk, and more specifically, lowering your risk when you are in drawdown. If you are up and things are looking good, go ahead, get aggressive, go on the offensive. But whenever I was in drawdown, I lowered my risk from 1% per trade to 0.5% per trade. Yes, it takes more time to pass. Yes, it's boring. Yes, it's frustrating. But that's why so few traders do it. And that's why so few traders ever make it, ever get funded, and ever make money. So by reducing your risk when you're in drawdown, you will protect the money that you spent on the challenge, which you should always do. You can take your time to get back up. And once you are back up, you're break even or you're profitable, then you can put your foot on the gas. But I truly believe that this single-handedly was perhaps the largest lever that I pulled to get funded and to ensure that I passed every challenge that I took. Number 3, I only took a challenge once I was consistent. I think, again, you could triple your pass rate just by waiting, just by doing the hard work that you're trying to avoid, or at least so many traders are trying to avoid. I had to make money. I only had 12 months of living expenses in the bank. And if I did not make money from prop firms, I was going to get a job, and it stressed the heck out of me. I would stay up at night stressing about having to go back to my miserable job of making minimum wage, of realizing that, people in my life said, we were right about him. He couldn't do it. I ensured that I did the hard work before I spent my hard-earned money on a challenge. Now, what does that look like? For me specifically, I was trading a demo account, and I was looking every Friday, was the account higher than it was on Monday or Sunday night? If it was, perfect, that's 1 week. Next week, perfect, that's 2 weeks. I waited until I got that momentum, and once I had it, only then did I sign up for a challenge. I think momentum is such a big key in trading and in life. It's all about momentum, of feeling that momentum, and I think it helps you obviously do better with your trading, but from an emotional and psychological standpoint, it's going to have really positive impacts on your trading. The fourth thing that I did was I really increased the time frame that I traded on, and really focused on A+ setups. Now, yes, this is generic advice, but again, it made a huge difference for me. Rather than trading the 1 hour and 4 hour chart, I traded the 4 hour and the daily chart. Was it boring? Yes, it most certainly was. Were there fewer setups? Absolutely. Did I want to trade more often? Of course. But the setups that I did get on the daily time frame were phenomenal. The win rate was much higher, and that's what allowed me to start my challenge with a winner, to get the momentum. Again, brings us back to momentum, to get the momentum and to really start the challenge off on a good foot. I see so many traders start a challenge with a B-, a C+ setup, and you're starting from behind. Your first trade, you're already in a loss, so it's hard enough to make 8 or 10%. Now to have to make back a 1%, 2%, 3% loss, you're shooting yourself in the foot. And so by focusing on A+ setups, you'll get that momentum. You'll start off the challenge on a good foot. Okay, as promised, I am now going to show you a high-level overview of my strategy. There's a 227-minute guide breakdown on everything that I did. I'll try my best to find it here, but if you type in Lark Funding 227-minute guide, you'll get way more in-depth, but we're going to do one chart breakdown so you can get an idea for how I traded. Now, again, we're not going to go into fundamentals, but before I would even look at the chart, I would be doing my fundamental analysis. I'd be going to forexlive.com, my FX book, all kinds of websites, again, that I share in other videos. I really want to develop a fundamental bias, a fundamental idea. Where is the dollar going? Where is the yen going over the short, medium, and long term? What's market sentiment? There's all kinds of stuff. We also have a free school community down below with over $4,000 of free courses, free, so you can join that down below. But all that to say, getting into it, I like to focus on the daily 4 hour, 1 hour as well sometimes. But the first thing that I always do is on the daily chart is I want to throw on my key levels and my round numbers. So first things first, I throw them on where it's really obvious. I like to repeat all the time, what would my 8-year-old cousin or nephew, I'm not an uncle, but my 8-year-old cousin, what would he say? what would he point out? And so I'm just throwing these on, and we're going to refine these as we move forward, but we're just trying to, pop these on as easy as we can. And I also like to look on the weekly chart at the moving averages to see where we are. I can see that these are coming up. I use the 50, 100, 200, and the 800 moving averages on both the 4-hour and the daily. So that's why you see a whole bunch of them. You should see about 8. So this is the daily. We put our key levels on. Again, if I'm moving quickly, this is just a quick overview. So we're gonna put these on. Next thing that we're going to do is we are actually going to stay on the daily. What I want to do, actually no, we're gonna go to the 4-hour. What I wanna do now is I wanna refine these key levels as round numbers, because as humans, we love psychological round numbers, and I wanna combine these key levels whenever possible to a round number. Because remember, a key level, it's not just an X price, it's a zone. And so we really need to keep that in mind and identify that within our analysis that it's a zone. It's not just, an X price. So what I like to do here is, when it comes to gold, you're gonna round it several dollars. So what's the closest round number here? This one's easy, 2297. It's gonna be 2300. So we're gonna reprice that, and you can see moves just a little bit. And now this is our zone. Next up, we've got 2364. So maybe 2364. Obviously 2365. If we look, how are the touches looking? Is it accurate? It is quite. We got touches here, 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 all across here. So 2365, I'm happy with. Next up, we have 2432. Let's try 2430. You can see this wick touches it here. We've got this here, so 2430 is perfect. 2481, let's do 2480, an obvious one. And then this touch here, 2531. So we're going to 2530 is the price. So that's how we do that there. We now have these key levels that are combined with round numbers. We understand it's a zone. Next thing we're going to do is we're going to identify our 4-hour key levels, which again are going to be horizontal lines, but we are going to make them dotted dash line, right? These ones we're not going to refine as round numbers. We're just going to throw those on there in zones that look the best to us. We're trying to get as many touches as possible. Again, I'm going through this quickly, but you can see here, we got touches here, across here, a support turn to resistance. So that's a good one. Next up, we'll throw this guy on here. So touches there, here, here, and here. Okay. So you could obviously add more. You could move further down the chart. You can add more, but in terms of our analysis today, not that important. Okay. So we've got our daily levels and we've got our 4-hour levels. Next up, if there's any obvious trend lines, we want to throw those on. I'm not a massive trend line trader, but the obvious ones I do want to have. We're moving up pretty steep, so I'm not seeing anything that's super obvious. This one will obviously, it is a trend line. This one could be valuable. Do you cut the wicks? Do you not cut the wicks? I try to not cut the wicks, but I still want as many touches as possible. That looks good there. Okay, so daily chart. The entire strategy, what we're trying to do is we're trying to identify zones of confluence. I want to find an area where multiple confluences line up. I want to throw a pending order on there, and I want the market to do whatever the market is going to do. So in terms of confluences, we have key levels, we have trend lines, we have fib levels, round numbers, moving averages. So far we have our key levels, our round numbers, we have our trend lines, and we have our moving averages. We haven't yet identified any moving averages on the daily that would be interesting. However, we're gonna hop down to the 4-hour chart and see what else we can find. So is there another trend line on the 4-hour chart? Well, we could throw this guy up here, which could be something. So let's keep an eye on that. I'm a huge believer in fibs. Fibs are the #1 tool that I use. I'm not sure why the 0 level is off. I need to fix that, but that's okay. We'll use a different color so we can more easily identify what's going on, maybe red. So it looks like we almost touched the 38 fib. This was an excellent trade. As you can see here, we had the 38 fib level. This combined with the 100 EMA on the 4-hour chart. So that was 2 zones of confluence. And you could maybe make the argument that there's a little bit of a key level there as well. So this was a nice trade. But because we came so close to hitting the 38 fib, it's not an area that I would want to use again. So we're going to delete that. Next up, we're looking for zones of confluence. So if we look at the 50 area, the 50 doesn't combine with our 4-hour key level, but the 61 area is looking interesting. The 61, you've got the 61, potentially the trend line. You've got the key level round number of 2430. It doesn't look like this 200 EMA will line up because it's going to take time for the market to get here. But again, that's roughly 2 confluences. You could have this 50 daily EMA, which is coming up nicely here. So this is something that I would want to look at closely. You could keep it as purple, but I usually put it as green. So that's one setup there. In terms of maybe a lower time frame, sooner trade, we could throw this fib on here, maybe blue, and you could see, oh, the 61 fib is coming up, lining up with our 4-hour key level of 2508, which is close to 2510. So you can maybe make the argument that it's also roughly a round number. So if I wanted to take this trade, what I would do, and again, this trade is totally dependent on the macro landscape, what's going on, market sentiment, which is a whole other video, multiple videos in and of themselves. But I would want to take a short here. I would set a pending order. I would want my stop loss to be the size of the zone plus half. So the size of the zone is the largest, is the distance from the first and the last confluence. The confluences here are pretty much perfectly lined up. It's a 61 fib with the 4-hour key level. Does that mean we're going to use a 3-pip stop loss? Of course not. Usually about 30 to 50 pips would be the average. That's still pretty tight. But again, we're going for sniper entries. So I would look on a smaller time frame to see. But again, you would set your pending order. I would set my pending order. This is not financial advice, roughly around that area. And then I would look on a smaller time frame. Okay, really, where can I safely put this stop loss? I can see that there's a strong key level here. So really, I'd probably feel comfortable with about a 50 pip stop loss. So this is a nice trade that I might actually take. We are dropping from the 50, so maybe we won't make it all the way up to the 61. And then in terms of take profit, I would target a minimum 1-to-1 risk reward always, usually 1 to 1.5. And then I would look at fib extensions to target larger areas. But really, you can see how simple the strategy is. We're using multiple different tools, multiple different confluences to create a picture of areas where multiple confluences line up, and then we throw our pending orders on. Again, there's many videos on this channel. We'll link some up here, link some at the end, so you can dive in deeper. If you have any questions, as always, drop them down below. But again, prop firms are the greatest opportunity for traders in the world right now. They changed my life, and I hope that with some hard work, some effort, some sacrifice, they too can change your life. If you made it this far, I appreciate it, and we'll see you in the next one. Peace.